Hi, Justin King from MFP Wealth Management, joined by Julian Smith, Tax Director at Princecroft Willis. Hi, Julian. So we've had a budget this afternoon, the 2015 summer/emergency budget, and this is our live reaction. I've got Julian here to answer some of my questions, live reaction to the budget changes and what they mean to you. So Julian, lots of changes, lots of implications, lots of things to talk about. The first thing I've got down on my list is non-DOMs. What can you tell me about the non-DOM tax changes?
Well, these are people who are normally born abroad, although they could be second generation, people who've been born abroad. And traditionally, they have what's called the remittance basis. So it means that they don't pay tax on overseas income or gains unless the income or proceeds are brought back into the UK. There have been a lot of changes, tweaks to this. Non-DOMs who've been resident in the UK have to pay a charge now, depending on how long they've been here. The latest change means that anybody, even if they're non-domicile, who's been resident in the UK for 15 out of 20 years, will be treated as a UK resident and will pay tax on their worldwide income and gains. It's quite a change, so it means that those people who've already been resident in the UK for 15 out of 20 years will come into the UK tax regime completely from 2017.
Right. Great, so tax changes for non-DOMs. And then quite a lot of tax tinkering around buy-to-lets.
Yes, this is an interesting one, and certainly not one that I saw coming. At the moment, if you rent out a property, you have a property portfolio, you have a bank loan, you pay interest on the bank loan, and you offset the interest against the rental income. What the Chancellor has announced is a restriction. It's going to be introduced, phased in over 4 years, but he's going to reduce the tax relief that you can claim on that interest to the basic rate. So if you've got a 45% taxpayer who has rental income, the interest that they pay on their bank loan will only attract 20% relief rather than 45% relief. It is being phased in. I think a lot of property owners will be looking at possibly owning properties through a company instead of personally, but it was quite a shock.
Sure, so advice definitely needed there.
Yes, a lot of advice.
Okay, great. Inheritance tax, it was talked about a lot before the budget. Yeah. There are some changes.
Yes, the changes, effectively, George Osborne has delivered on his promise to increase, in certain circumstances, the exempt amount to £1 million. But the way it works is that the nil rate band for inheritance tax purposes of £325,000, which has been frozen for a number of years, will continue to be frozen until 2021. But in addition to that, there's an extra £175,000 per person to cover property. So if you're a property owning married couple in the right circumstances, your nil rate band will now have gone up to £1 million. So an extra £350,000 tax free, which again has got to be good news.
Significant tax saving for the families who would benefit.
Exactly.
Wonderful. And then lastly, we chatted briefly with Heather, but the thing about dividend taxation is going to have big ramifications, isn't it?
It's going to be interesting to see how that works, because at the moment you get a tax credit for dividends, and if you're a basic rate taxpayer, you don't pay any further tax. So the credit covers your tax liability. For higher rate taxpayers, if you're a 40% taxpayer, you pay an extra 25%. If you're a 45% taxpayer, the extra tax is 30.5%. Now that's all going to change. There's going to be an allowance, a tax-free allowance for dividends. You're not going to get the credit anymore, and higher rate taxpayers are going to pay significantly more tax on the dividends. So it will require a review of your investment portfolio between interest, dividends, tax-free investments. I think the investment landscape has changed and a thorough review is required.
Sure. Well, wonderful. That kind of gives us a roundup of the major tax changes. The devil is obviously in the detail. Further information will be coming out to you as normal. And if you'd like to register for in those newsletters, if you don't get them at the moment, please do so. And we look forward to informing you again soon about tax.